Hey there and welcome to the Market Monkeys channel. It's Julia here and today I want to share with you the analysis that we made for ourselves to try and understand if we want to invest into AMD. So stick around until the end of this video to find out what our plans for AMD shares are. Before we jump into our analysis, let me tell you a few words about the company. Advanced Micro Devices, or AMD, is a global semiconductor company specializing in high-performance computing, graphics and visualization technologies. AMD is one of the leaders in the semiconductor industry, known for their innovative processors and graphic solutions. As shown in the following table, AMD's revenue primarily comes from the United States with $7.8 billion in 2023, and on the second place is Japan with $4.6 billion. The interesting part is that China is representing approximately 15.1% of overall revenue of the company. AMD operates in 4 different segments: the data center segment, the embedded segment, the client segment, and the gaming segment. These segments include everything that ends with use: GPUs, APUs, CPUs, DPUs, and all of kind of stuff like that. If you are an AMD shareholder or in general you're looking to invest into AMD or any other semiconductor company, you should listen carefully because right now we will break down company's position in the market and in general risks that AMD investor might encounter. We will do this by the help of the SWOT analysis. This is a tool used to understand what is the internal strengths and weaknesses of the company and external opportunities and threats. Why do we need this? Generally to understand if we like the company, what we do like about them, what we don't like, what are their position on the market, and what are the risks. So let's start with the strengths of the company. And the first one is their rapid revenue growth of 115% year over year in the data center segment. I consider this a major strength of the company because usually rapid revenue growth represents successful market penetration, effective sales strategies, and growing customer demand. And AMD is actually excelling in all of those. And of course, from the investor point of view, this news usually viewed very positively and they lead to higher stock valuations. Now let's talk about AMD's increase in gross margin. Gross margins usually represent amount of profit that company gets from selling one piece of their product. It could be due to successful pricing strategies or effective production. AMD's GAAP gross margins grew from 46 to 49% year over year, which is pretty impressive, and it could actually mean that the company will be earning more in the upcoming quarters. Another key strength of AMD is innovations, and the first one is power efficiency. This is actually something that sets AMD apart from competitors like Intel and most importantly Nvidia. So basically what it means is that for the same performance, AMD's GPUs actually consume less power than, for example, Nvidia's, and this could actually make them a very great competitive advantage in the future if they're continuing this way. Another pretty exciting news is that AMD is actually reinforced their partnership with Taiwan Semiconductor, and they will be using their SOIC technologies into their MI300s. Basically what it means that they will have a better, more innovative technology and they will be probably earning more money. While we could discuss other strengths like partnership with major companies, global footprint, diversification of their product in different segments, let's move to weaknesses because there are also very interesting stuff. But before we do this, if you find this information valuable, please press the like button and subscribe to our channel. The first weakness is the intense competitive pressure. AMD faces strong competition from Nvidia and Intel, both of which have stronger marketing, distribution, and more money. This fierce competition could make it very difficult for AMD to gain a market share and to grow. But as an indicator of how AMD is dealing with this competitive pressure, we could actually take a look at their gross margin for the past 10 years. And here we can see that on average in the past 10 years their gross margins were in the area of 35%, and now they're almost 50%. So it basically shows that they're dealing with this competitive pressure pretty nicely. Next is their reliance on the outsourced manufacturing. As we have mentioned before, AMD is relying on Taiwan Semiconductor facilities for manufacturing rather than its own, and this could be a huge problem. We have already seen that there are problems if you're relying on one vendor. Even now, CEO of Taiwan Semiconductor has projected that the supply-demand equilibrium for advanced chips will not be met until 25 or 26. I remind you that right now we're in 2020 2024, and actually when it will be 2026, we don't know what will happen then. Maybe he will again come up and say that they will have problems for a few more years. Lastly, we of course have lower brand recognition. Although AMD made significant growth in the past couple of years, their brand is still not as widely recognized as Intel's or Nvidia's, and this actually could mean that less people, less clients will be coming to them for their help. Now let's talk about AMD's opportunities, and this is actually a very exciting topic in the times of all of the AI revolution, machine learning, and data center market growth. First up, AMD's EPYC server CPUs present a massive opportunity in the data center market. With people using more data and needing more cloud services, AMD has a great chance to gain more customers by using its strong performance and by pricing advantages. Also, hyperscalers would want to diversify because nobody likes to be dependent on only one vendor. So AMD here is an obvious choice, and even some analysts say that there isn't any other players except of Nvidia and AMD in this sector right now. The other thing, let's not forget about AI and ML, machine learning. These technologies are really hungry for computing power, where AMD's CPUs and GPUs are really shining. So if AMD will increase their development in these areas, they can actually secure a nice revenues from this sector. Another great opportunity for AMD lies in the mobile processor markets. It's actually the area where Intel has struggled. If AMD will be able to gain some market share from Qualcomm, they could secure an amazing revenues for the upcoming years. Now let's talk about threats of the company. And the first one and the biggest one is of course competition. Intel, Nvidia, Qualcomm making it very tough for AMD to grow. These companies have more resources for R&D and marketing, and Nvidia's dominance is a major challenge. Another threat that we must consider is very fast technological change. As we know, technology now is unstoppable, and every company must progress and invest a lot of money to stay toe-to-toe with these technologies. If they don't, their product could actually become outdated really quickly. We see it happens to Intel not on one occasion. By the way, if you still haven't watched our Intel video, I strongly recommend you do after I'll finish here. As we mentioned before, but I must say it again, the supply chain difficulties is another thing that we need to consider over and over in this sector. AMD depends heavily on Taiwan Semiconductor, and they depend only on Taiwan Semiconductor. So any supply chain problems or chip shortages could hit AMD really hard. You probably remember what happened in 2022 and 2023. Companies are still trying to recover from the shortage that we've seen. Nvidia was actually taking orders a year in advance. Just a few words about the overall situation in the world, and we will be moving into AMD's stock. The ongoing trade tension between US and China are a significant concern. AMD as a US-based company could get banned from exporting to China. As I mentioned in the beginning, China represents 15.1% of AMD's revenues. There is economical issues as well. Rising inflation and interest rates may slow the growth for AMD, but we are having a slight hope that it will not be a problem anymore. Social trends in technology adoption play a crucial role on the demand in this sector. As consumers and businesses rely more on digital and computing, the demand for AMD's product is continuing to rise. The global semiconductor market size was actually valued at $544 billion in 2023 and is expected to reach around $1.1 trillion by 2033, poised to grow at a compound annual growth rate of 7% during the forecast period between 2024 and 2033. In general, the semiconductor industry is defined by rapid innovation, which presents major opportunities and challenges for AMD. On the plus side, emerging technologies like AI, IoT, 5G are creating new markets and demand for processors and GPUs. But AMD's investment in R&D are actually very crucial in this area. Let's now talk about what this means for AMD stock and how it will affect our investment decisions. According to JPR, Nvidia's market share in Q1 in the semiconductor sector is 88%. As they say, it grew from 80% in the previous quarter, and JPR are claiming that this market share was actually stolen from AMD, which fell from 19% to 12% share on the semiconductor sector. Meanwhile, they say that Intel sunk from 1% to 0%. AI server market is expected to grow at a compound annual growth rate of 20% from 2024 to 2033, which means even if AMD doesn't take any market share from Nvidia, this revenue segment is expected to grow at least 20%. Although overlooking their innovative approach, I think it is safe to say that these numbers will probably be bigger. Given the challenges that Intel faces right now, I think it's also safe to assume that AMD will be taking their chunk in PC chip market. Add to this expanding gross margins, tight partnership with Taiwan Semiconductor, and we actually having a company that is aimed to succeed in the next couple of years. Now let's talk about the valuation of the company. Although their PE ratio is pretty high, I wouldn't take it into the consideration as it doesn't include a growth in it. So while the PE ratio is 187, that is a lot. For comparison, PE ratio of Intel is only 88. But if we take a look at the PEG ratio, it's PE ratio divided by growth, we get that AMD stands at 0.64. And we could say that this is an amazing deal. For comparison, Nvidia's PEG ratio is 145 and Intel's is 199. So by the PEG ratio, AMD is the cheapest company on the semiconductor sector right now. Taking everything into account, here is a bottom line. AMD looks like a strong buy, especially with a PEG ratio that beats all of the competitors by far. However, I have to admit, I am a bit cautious. Nvidia has been a giant kill in this space, and there is always a possibility that they will actually kill AMD same way they did with Intel. So each of you might decide for themselves. I'm actually strongly considering adding AMD to my portfolio, but I'm not in rush to do so just yet. On this semi-optimistic note, I want to thank you for being with me, to remind you to like this video, to subscribe to our channel, and we will see you on our channel in the next videos. Take care!